I think there's a real opportunity there in retail. I think as much as we had the Robinhood revolution over the pandemic, I still think retail is pretty significantly uncovered by ETFs to the extent it could be.
Right, and where we are seeing retail is more thematic-oriented ETFs, whether that's the Global X suite of products, iShares has them, other firms that are offering disruptive technology products, either index-based or actively managed, and that's a part where we see sticky assets. So it'll rotate in. This has been a year for more the growth-oriented strategies, artificial intelligence. I know I'm getting into your world of where we go head for the future, but we are seeing people rotate back into those strategies because they're performing quite well.
Yeah, I think it's going to be tricky to draw a line in the sand on any of those types of strategies while we still have, well, frankly, during an election cycle. I mean, I think the next 18 months is completely dominated by global macro trends. And so I think it's tough for any of those themes to get enough airspace, right? To get enough room to move to show that they can prove anything, because 3 weeks from now, we're going to be back at arguing about the debt ceiling. And once that's over, there'll be something else that we're arguing about. And then it'll be whether or not we're going to get a cut or whether we're going to hold pat on the Fed. And all those things seem to dwarf even the right ideas. I mean, if you look at some of the AI-based funds, if you look at everything from cannabis to DeFi, like you name a theme that's been really popular over the last 2 or 3 years, it's been very tough for them to break out of the headline cycle, which is what you need for that to be a great long-term investment. If you're just buying it to trade and get the pop from a good headline, that's one thing. But as long-term plays, do you think there's still an appetite for really playing into a theme for 2, 3, 5, 10 years?
Well, I do think that the people who are in them for the longer term. So we had really tough performance last year for most thematic-oriented ETFs, and we didn't see the outflows, and we didn't see the inflows either.
Well, People ARK being the case in point, right?
Right.
Just Fortress ARK, yeah.
Right, ARK being the poster child still for thematic investing, despite the up and down performance that's there. But even some of the other products, we've seen people seem to be in it for the intermediate term. The long term, I don't know, but certainly for the intermediate term, they waited it out, then they'll maybe add to it when things are down, and have confidence in these trends. And if you believe in the trend that robotics or artificial intelligence or healthcare technology, among others, is going to be disruptive for the future, it isn't in 2023 where we're going to see all of that play out. It's probably going to be in 5 years down the road. And so you want to be in there for the longer term. But I remember back in the day when I had hair, when I was a financial advisor, and you would try to pick 1 or 2 of the stocks that could fit one of these themes. Oh my goodness, I wish we had ETFs.
Well, and now we've got the super narrow ones like Round Hill's, 5 stock portfolios, which is, a bit of a hack around that. But, there's no limit to how far you can slice and dice these things. It's just a question of what the appetite's going to be.
But my goodness, let's stick with Round Hill for a second. The timing on that, they launched a bank, the 6th largest bank that make it into the ETF, BIGB, BIGB, is the ticker on that, just at the same time that the regional banks all went under and money was moving towards these larger banks. So it's the perfect example of the ETF industry can be nimble, it can shift where it is, and I think it's a narrative that works.
One thing that's been fun to see is that, you and I have been in this business now for 400 years or something, and it wasn't that long ago, 5, maybe 10 years ago, where there would be these cool niche products that we would love because they're doing something really cool, and they get like $4 million ahead of seed, and then they just have to shut them down because they were still too expensive for even a large issuer to run. That seems to have stopped largely. I mean, even some of the what I would call more exploratory products from folks like Simplify or Innovator, places where you're not necessarily expecting each one of those to be absolutely on fire. Those products now have like $50, $100 million in them. They're viable products, even if they're not the billion-dollar headliners. That's exciting to me because it means some of these products will actually stick around through a full cycle, which has not always been the case. I mean, we've talked many times about the dustbin of ETF history where that was a good idea, but nobody put any money in it. That was a good idea, nobody put any money in it. Now it seems like there's enough retail, there's enough institutional that even some of the smaller products become viable. Are there any in that mix that you're particularly keen on, that you're excited to see survive?
Well, what you were, I'll try to come up with an example or two in a moment, but what just was exciting, because people talk about how concentrated the ETF industry is. You still have iShares and BlackRock, I'm sorry,
80%
and Vanguard and State Street dominating the overall flows, but we are seeing more mid-sized or even newer entrants come into the marketplace and have success. Now, they're not going to be successful with all of their products, and we'll see firms come out with something, see it doesn't work, especially if we've seen closures this year. Some of that are products that have been around for nearly a decade that just were sitting on the shelf, dying, and just it makes sense to put them out of their misery, and bring in something that's newer and fresh, and that's going to come from some of those larger asset managers. So I do think what's exciting is we're seeing these more moderately sized firms have some success and be able to do it in a way that continues to gain traction.
Yeah, definitely. Well, Todd, thanks for spending some time chatting today.
My pleasure. Thanks a lot.
That was fun.
Yeah.